You hear recession everywhere, right? But according to the analysis we're looking at today, what's coming next is not your normal everyday downturn. We're talking about a once-in-a-lifetime financial event, a crisis that could be worse than 2008, but in a way that most people just aren't expecting. And this quote, this gets right to the heart of it. The problem isn't just in one corner of the market, like housing, or one industry, like the banks. The whole argument is that the bubble this time around is the entire global financial system itself. To really wrap your head around that, we need to compare it to the last big crash we all remember. So let's break this down, because this is the fundamental difference. In 2008, the crisis really started in the housing market, and the spark was the banks. This time, the theory is that the crisis starts with the system itself. In the spark, it comes from something we've all been told is the safest thing you can possibly own: government debt. All right, so let's get into the real meat of this. Well, all the headlines are screaming about inflation and interest rates. The real story, the hidden problem, is all about debt. This is the crucial pivot you have to understand. We've shifted from a crisis of private debt, like mortgages, to a potential crisis of public government debt. And believe me, that changes the entire game. And the scale of this, it's just staggering. We are in completely uncharted territory. The amount of debt that countries have racked up makes the levels before 2008 look tiny. This isn't just a little bit more, it's a whole new world of debt. Okay, so how did we even get here? Well, it's this dangerous feedback loop. It starts with governments that just keep spending way more than they bring in. To do that, they have to borrow. But here's the trap. If central banks raise interest rates too high to fight inflation, they could actually bankrupt their own governments. So the only real option left is to keep creating more money, which is the very thing that inflates these massive system-wide bubbles in the first place. Now let's look at why this is so much bigger than what we saw back in '08. Because when the problem is this fundamental, its impact is going to be felt absolutely everywhere. This right here is the key distinction. 2008 was a crisis that burst inside the banking system, and then it spilled out everywhere else. But the scenario we're exploring today, it's one where government debt, the very bedrock of the entire financial system, is the bubble itself. So, what happens when that bedrock starts to crack? Well, look at this. Currencies, which are basically backed by faith in the government, they get unstable. Bonds, government IOUs, they could collapse. The banks, which are required by law to hold these safe bonds, they suddenly become insolvent. And of course, stocks and real estate follow right behind, because the value of everything is built on that foundation of stable government debt. So we're not just talking about a downturn or a bear market. The analysis we're drawing from calls this a fundamental reset, a moment where the rules that have guided the world of finance for decades could be completely thrown out and rewritten. So, if the system is a tinderbox just waiting to go up, what could be the spark? The analysis points to 3 specific things that could set it all off. It could really be any one of these. Just imagine a major economy, doesn't even have to be the US, defaulting on its debt. Or what if there's a failed bond auction, where a government just can't borrow money anymore? Or maybe the most seismic event of all, a major global currency suddenly loses the world's trust. Any one of these could send an instant shockwave through the entire interconnected system. And here's the really unsettling part. This isn't just some abstract theory. The research suggests the warning signs are already here. We're seeing bond yields rise, which is just a clear sign of stress in the debt markets. We're seeing countries actively looking for alternatives to the world's main currencies. You can actually see the cracks starting to form. And that's really the big takeaway here. The final catalyst, that big spark, hasn't hit yet. But make no mistake, the fuse has been lit. Okay, so if this is the reality we could be facing, the goal isn't to be scared, it's to be strategic. So let's pivot away from the problem and talk about preparation. This is such a crucial thing to remember. Moments of huge change and massive disruption are also moments of incredible opportunity. The people who see what's happening early, they're the ones who can position themselves not just to survive, but to actually come out of it stronger. So where is the smart money reportedly moving? This table lays it out pretty clearly. First, into hard assets, things like gold and Bitcoin that exist outside the traditional government-controlled system. Second, into essential resources, stuff people will always need, like energy and food. And finally, into resilient businesses. Think defense contractors or companies that generate strong, reliable cash flow no matter what the economy is doing. And this really is the ultimate message of this whole thing.
The goal of understanding these risks isn't to cause panic. It is to inspire preparation. A proactive, informed strategy is always better than a reactive, fearful response.
So we'll end on this question. The analysis we've walked through today argues that the fundamental rules of finance are in flux. The bedrock assumptions that we've all lived with for the past 40 years are being challenged. And the only question left is, are you ready for whatever comes next?